So Bitcoin, I think, will get shoved around by volatility. As this kind of settles a little bit, if you do get ongoing capital outflows of the US, that actually could be good for Bitcoin. So sometimes people ask, what could make Bitcoin more meaningfully disconnect from the NASDAQ? Well, one is anything that hurts NASDAQ margins, but that does not hurt global liquidity, which should generally be somewhat supportive of Bitcoin, minus certain particularly volatile periods. But then it more structurally impairs the NASDAQ, the S&P 500. I think that Bitcoiners got very attached to cycles. And I think especially as the asset gets larger, those cycles become less clear. Anytime a lot of market participants think they know how something works is when it tends to change. So just when all like TradFi market participants were like, well, bonds always go up when stocks go down. As soon as they all know that, that's when it stops happening. Because it's already fully positioned for, and then it's not going to happen. And so I think that basically everyone's seen the Bitcoin cycle so many times, they expect there to be a cycle, and cycles can change.
Lynn Alden begins by clarifying her belief in Bitcoin's long-term stability and highlighting the fact that its foundations are still solid despite its recent turbulence. Although she still believes that Bitcoin will end the year higher, she warns that the road there won't be easy. Lynn claims that macroeconomic uncertainty, which can include everything from changes in policy to swings in liquidity, is still a significant factor in Bitcoin's performance. According to her, even if Bitcoin is maturing, many big investors still view it as a risky asset. This implies that Bitcoin typically experiences pressure when markets become unstable. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you, and enjoy the video.
And I think it was at the time of the conference, it was like probably the upper 60s, 60-some thousand. And I was like, well, it wouldn't be my base case, but Bitcoin can do Bitcoin things. And it did. It touched 100K by in a fairly short period of time. It jumped from the 60s all the way up to 100K. So I don't really rule out Bitcoin ever doubling in a year. I mean, it's Bitcoin, but I tend to have more conservative price predictions, which I think there's a good chance we can get back up above 100 this year. Before all this kind of tariff kerfuffle, I would have kerfuffle. I would have had a higher. I would have had probably a higher price target. If I imagine a scenario that brings us to very high prices this calendar year, it would probably be because some massive liquidity unlock happened. Like, let's say the US bond market broke, the Fed came in and basically did yield curve control, or kind of QE that they don't really want to be doing, or some sort of big treasury operation twist sort of thing. It would probably take something like that combined with some sort of de-escalation of tariffs. So I never really rule out what Bitcoin's doing. I look at a couple of things. One is I think liquidity is probably going to be somewhat favorable for the rest of the year. And two, if you look at certain valuation metrics, I like to look at the market cap to realized cap ratio, which is market capitalization compared to the average on-chain cost basis. And this current consolidation has taken off a lot of the hype around it. So if you look at the prior consolidation, so Bitcoin reached 73,000 in March 2024, that ratio got a little bit elevated. So it wasn't elevated to the point of prior multi-year tops, but it was a little bit heated. And so after about a 7-month consolidation, it pretty much worked off all of that excessive valuation, that excessive hype, kind of allowed the market to consolidate. Then when it jumped to 108K, it kind of reached similar frothy levels. And so the fact that we've been consolidating for several months, not particularly surprising. I think we worked off a lot of that valuation already. So I think we're at a pretty strong foundation to at least start building from, especially once we get past maybe near-term stock market shocks and things like that.
Maybe Bitcoin will get choppy and even temporarily slide back. I don't know how low you think it could possibly go, but do you think we'll finish the year higher than what we started at?
I'd have to remember exactly where we started the year. I know the ballpark where we started the year. My guess is that we end up higher at the end of the year than we are now, at least. There's a lot of variables that could affect that. So I think that most days where you have a big down day in markets is probably not going to be a good day for Bitcoin, just because most pools of capital treat it as a risk-on asset. It's still small, it's still volatile, and a lot of times, especially because it trades 24/7, if people are worried about how things are going to open on Monday, some pools of capital can sell their Bitcoin on a Sunday and prepare, right? So the 24/7 can sometimes, add to its volatile pricing, especially when TradFi markets are freaking out, because we're talking about a sub $2 trillion network compared to this multi-100 trillion dollar global behemoth of interconnected finance and leverage. So Bitcoin, I think, will get shoved around by volatility. As this kind of settles a little bit, if you do get ongoing capital outflows of the US, that actually could be good for Bitcoin. Sometimes people ask, what could make Bitcoin more meaningfully disconnect from the NASDAQ? But one is anything that hurts NASDAQ margins, but that does not hurt global liquidity, which should generally be somewhat supportive of Bitcoin, minus certain particularly volatile periods. But then it more structurally impairs the NASDAQ, the S&P 500. We saw similar to this in the closest period to maybe look at or study is the 2003 to 2007 period. That was the prior weaker dollar cycle. There wasn't this kind of like mass excess of capital, but there was around the margins. Capital went to emerging markets, capital went to commodities, capital went to gold, capital went to these other assets. And so US stocks were not really the place to be, and a lot of other assets were. And I think if we encounter like a 5-year period like that again, that could be a period where Bitcoin does pretty well, even as the stock market, the US stock market, doesn't do particularly well. So that's kind of how I view it. I think volatile but favorable. I think that Bitcoiners got very attached to cycles. And I think especially as the asset gets larger, those cycles become less clear. Anytime a lot of market participants think they know how something works is when it tends to change. So just when all like TradFi market participants were like, well, bonds always go up when stocks go down. As soon as they all know that, that's when it stops happening. Because it's already fully positioned for, and then it's not going to happen. And so I think that basically everyone's seen the Bitcoin cycle so many times. They expect there to be a cycle, and cycles can change. And so I think it's less about the halving cycle. It's more about the liquidity cycle, but liquidity is complex in this environment. We've at least taken off some tail risks of politics for the next few years. So Bitcoin has always had kind of this like embedded probability of like, what if the US takes its gloves off and just goes after Bitcoin really hard, right? Because that would certainly, tell every major financial institution in the US that you can't custody your own Bitcoin, kind of go after it. That's at least off the table for a while. So I think that a lot of the fundamentals look pretty good at the current time. So I expect pretty good performance over the next year or two, but it is subject to not having like a 30% market crash or things like that could, temporarily push us lower that we'd have to then rebuild from.
Lynn also examines one of Bitcoin's most intriguing possible applications, its involvement in artificial intelligence in the future. According to her, creating a Bitcoin wallet is easy and straightforward. However, AI agents frequently encounter difficulties while utilizing conventional financial systems or credit cards. AI services are particularly susceptible to problems like chargebacks and fraud, which are prevalent in conventional payment systems because they come with real-world expenses and need a large amount of processing power. In an AI-driven society, Bitcoin transactions are ideal for microtransactions and safe digital payments since they are final and independent of third-party approvals. Now, let's dive back and hear what he has to say.
People often question, is the global reserve currency good for America? With the kind of assumption that the answer is yes. But like any country, especially one as big and dynamic as America, there's not just one America. It's a big mix of a lot of different things going on together that happen to be in one political entity. And so that status basically empowers certain parts of the economy, certain people in the economy, and then it hurts others. And so, for example, if you're in Washington, D.C., and you want to be able to sanction almost anyone in the world, it's nice that everyone's using your ledger. It makes it harder for any entity to go around it. Not impossible, but your sanctions are rather powerful compared to if Canada's sanctioning you, for example. You get a lot of leverage that you can basically pressure other countries with. You have the rest of the world financing part of your deficits because they have this kind of structural need for assets. It's generally good for the stock market because all this capital, what countries do with it, there's often this thing that people say, well, we're sending them pieces of paper and they're sending us goods and services, which is true, but then there's one more step. With those pieces of paper, they go and buy our financial assets. So they buy our stocks, they lend to our corporations, they buy our private equity, they buy some of our real estate. So what we're doing is we're selling portions of our appreciating assets to the rest of the world, and we're acquiring some of their depreciating assets, goods and services, which are useful, but they're different than appreciating assets. So if you're in New York, if you're in the dollar export business, basically, which is a combination of Washington and New York, that's great. If you're in a high margin industry like tech, healthcare, places like that, you're maybe not super benefiting from it, but you're not really harmed by it either. you're not really, you get a lot of the privileges of having a strong dollar without a lot of the downsides.
I want to finish up with a little bit about Bitcoin. How does Bitcoin fit into all of this? And do you think that Bitcoin will be one of those neutral reserve assets that we maybe start to position ourselves in the direction of?
So I do. I think so right now in the existing framework, gold is the primary neutral reserve asset that central banks already own. They already know how to buy. So that gets kind of the initial benefit. Bitcoin is the up and comer. So as long as it continues to stay decentralized and secure, I think it'll continue to grow in size. It has the benefit that it has its own settlement network attached to it. That's kind of half the point. Whereas the reason gold can't kind of by itself be the best global reserve asset is because then you need this like layer of credit on top of it. Whereas Bitcoin can function on its own. In addition, when we've seen these other countries try to go around the dollar, they're always trying to build these like systems to interface with each other. So all these like closed systems, trying to figure out how to do cross-border trade. While there's this really powerful open source solution kind of staring them in the face. Now, it is understandable that they've not rushed to it because, using the Bitcoin network means owning volatile Bitcoin. It's also still fairly small compared to the scale that the world would need for something like this. So there's some degree of career risk of being early, for example. But it is kind of reaching the scale where I think that countries will increasingly take it seriously.
Finally, Lyn Alden presents a compelling viewpoint on Bitcoin's long-term significance for the world economy and technological advancement. Although gold is still the major neutral reserve asset used by central banks today, she notes that Bitcoin is rapidly becoming a competitive substitute, particularly given that it has its own decentralized settlement system. Bitcoin is a very effective tool for cross-border payments since it can operate independently, unlike gold, which needs extra infrastructure and trust levels to settle international transactions. Government adoption of Bitcoin has been sluggish because of its volatility and limited size. Lyn thinks that more nations will start to see the network as a global payment system and reserve asset as it develops and demonstrates its security. She also points out that Bitcoin may be crucial to the development of AI since, although AI agents find it difficult to utilize conventional banks, they can create and use Bitcoin wallets to make safe final payments, particularly for expensive, hardware-intensive services where chargebacks could be harmful. Lyn concludes by discussing how the US dollar's status as the world's reserve currency favors some aspects of the American economy, such as Wall Street's access to international finance or Washington's geopolitical influence, while leaving other aspects behind. In summary, Bitcoin is an increasingly popular substitute for the existing system that provides greater decentralization, effectiveness, and accessibility from anywhere in the world. Lyn sees Bitcoin as a tool with enormous unrealized potential. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.